What's up, family? This is Professor Cornelius Ward, and I wanted to just spend a few minutes with you because I made some modifications to Eurodollar based on a few technical things that I've been looking at. So bear with me for about 5 or 6 minutes, and we'll try to get through it as quickly as possible. Um, so basically, during today's Euro news that we had, let's see if I can bring that in here. Awesome. So today we had some main refinancing rate news at 5:15 Pacific time, 8:15 Eastern, and then we also had some monetary policy statement stuff here. Unemployment claims came in the U.S. side. So basically, I want to focus here on the euro main refinancing rate to see how that played a factor in what has happened. So during today's Euro News trading session, what happened was the euro dollar tried to rally up. It tried to go up here, and that's what we call a false positive. Okay, so when you see price action trying to go up, and this is the candle here, right around five something, it tried to take off and go up. But we call that a false positive when we can clearly see what the analysis is, meaning it's a downtrend. When it does that during news, it's called a false positive. And so what ended up happening is that now that it's come down, the market has now given back the gains only because the ECB, or the European Central Bank, they ended up raising the interest rates during the news. So everybody was excited for an uptrend. Why? Because that's what I really want to talk about. That's the big picture. That's the uptrend. And so when the news came out, everybody's thinking up. But when they got the word that the interest rate's going to be going up, and that interest rate's going to be going up by 25 basis points from 3.5 to 3.75. So when you consider that, and as a matter of fact, let me bring that back here. You can see it right here. Main refinancing rate went up from 3.5 to 3.75. It was the forecast, and here's what actually happened. Okay, so they came in exactly as anticipated, 25 basis points greater than they would like, but that's the reality, and they were expecting it. So the question kind of still remains: where is price action going to go from here? Now that we had this false positive, and we starting to see that it's giving back some of the gains, people are changing their mind. What's going on here, and how do we make sense out of this? Well, before the news came out, you and I have already been making sense out of it. If you go back to all my previous videos, we've already been in here with a sell limit order at 110.80. We already had one at 110.40. We were just waiting for all of this to play out. So it's now playing out in what we have already anticipated, and that is this. Looking at this intermediate time frame, instead of not looking at the big picture, we're looking at a smaller picture, and I call the 4 hour an intermediate time frame. It's somewhere in between. It's not a low time frame or a high time frame. It's right in the between, nice sweet spot. So if we're looking at that sweet spot here, then we want to consider this candle right here. Because ever since April the 2nd at 6 p.m., this thing has been noisy. Look at this noise. This is insane. You coming up like this and then all the way almost back down, and then you drive way up here and come all the way back down to mid pivot, and then you just kind of range, and then you take off, and like it's just spazzing out, man. It's noisy. And I'm sure a lot of people lost a lot of money because this range happens to be really wide. And where did this range begin? It began here at 107.882. Looking at the low of curve analysis, which is what we're looking at on the intermediate time frame, and curve analysis on the 4 hour ends at 110.9566. So based on this, we should be anticipating this to be supply, and that we should be having it come down some more. Now, only thing I really want to point out right now is inside of this noisy range, we need to know two things. where is support and where is resistance. Okay, so based on current price right now, right here, I have major support at 109.45. I call it major because I can find other support levels. Here's one clearly. It hit it and pulled back. But I'm talking about where are some key support and key resistance levels where trend can actually change and things will be different. And so we want to look at those areas. And so I think that's this support level at 109.45 is one, and this 110.86. Why are they key? Because if price action opens and closes above this resistance level, I'm anticipating a continuation of the uptrend. However, if it opens and closes below this support level, I'm anticipating a continuation of the downtrend. That's why these two support and resistance levels are key on this 4-hour chart. All right. Now, if we should find that price action would break this support level right here, then I'm anticipating that we're going to be due for some, key institutional buying targets. And those targets are going to be these buying levels down here at 108.20 and 108. Why? Because they're in the demand area based on this candle here. So again, breaking this here, this support level, I'm seeing a continuation of the downtrend. All right. Now, I don't expect it to be a smooth ride. I hope it is, but I don't expect it to be a smooth ride. And the reason why I'm saying that is because when interest rates change, when they raise that interest rate, some people, not everybody, but quite a bit of people, I'm sure, took advantage of some safe havens or some safe haven currencies. A couple of them that we know off the top of our head happens to be yen and Swiss. When you pair those up against the dollar, those are safe haven currencies. Just look it up. But basically, it's a way in which investors are able to capitalize off the differences of those interest rates between the U.S. and those safe haven currencies. And if they can make money while their money's sitting in the bank by just switching the currency or converting it over to a safe haven currency and taking advantage of the difference in the interest, that's going to be beneficial to them. But if they do that, that's going to cause volatility in the market. And it's going to cause people to start, moving their money away. And when they move their dollars away from here and convert them to safe haven currencies, they're now exchanging US dollars for, let's say, yen or Swiss or whatever it is, but you're removing that out of our market. And when you do that, that ends up causing the market to experience some type of volatility and things like that. And so we want to make sure that we're looking at this in such a way that we're taking into account all the things that could transpire. So with people, some giving in, some not giving in to the safe havens, all of that is going to play out and it's going to cause a lot of noise to happen. And I think that's why we've been seeing all this noise, is because every time we get news every month and they're talking about interest rates, that's scaring people. So people are shifting their money around and moving around, trying to figure out what to do. All right. So I just want to keep that in mind. And by me saying that, I want to say, keep your position sizes between 2 to 3% of your net asset value or of your gross balance. Okay. That way you can ride this noise out. I like to do a 1-to-1 trade. I don't do 3-to-1 or 2-to-1 trades. I do 1-to-1 trades, 2 to 3% of my balance, and my stop loss is just as far away, just as much risk on my stop loss, which is 2 to 3%, as I am on my position size. So I do a 1-to-1 trade. You don't have to do that. That's all up to you. But I have not found 3-to-1 and 2-to-1 to be a consistent risk to reward ratio. I know that's what a lot of people use, but I don't see a lot of people rich off of it. I don't see a lot of people blessed behind it. I see a lot of people still hurting. So it's not something I'm interested in. You may not be interested in what I'm doing, because the way I trade, that 1-to-1, man, you don't make a lot of money. Not fast. You make a whole lot of little money over a long period of time. But guess what? I'm consistent. And so you got to make a choice. Do you want to consistently make and lose money on a big scale, or do you want to consistently make little money over a long period of time? And you got to answer that question yourself. Only you know what your needs and dreams and goals and aspirations are. That's on you. All right. But just want to give you guys that tidbit. So now that you guys have seen that, based on the intermediate time frame, this 4-hour chart, we are experiencing a downtrend, and it's possible, strongly possible, that if we get a close here, that they're going to come down here. This is where I believe we're going to get our lowest opportunity for that big picture. All right. Now, let me close out all these orders here. I've already gone over these orders on other videos, so I'm not going to do that here. But what I am going to do here is remove these orders so that we can have some clarity on the bigger picture, which is where we're headed now. So now, from this 4-hour chart, now that we see we could potentially have some downside, let's see what that looks like on the big picture, and let's pan out. All right. So now that I've panned out from the 4-hour, this is how we look on the big picture. Price action is here. It's working its way in between this support and resistance level here. Resistance being at 110.86, support being at 109.45. If price action breaks below 109.45, meaning opens and closes a candle below that, I'm anticipating that price action is going to reach our demand here on the 4-hour, right between 108 and 108.20, and that's where we'll get a nice turn to go back to the upside, and that should last the entire ride up. I don't see them coming back here again after they leave this area. Once they exhaust this demand, that's it, and they break out, they're not coming back there. So if you guys are looking to get into a long-term opportunity to the upside on euro dollar, this is it. And I don't know when we're going to get another one, but this is it. Last time we got one, it was here. So they don't come that often. You see, the last time it pulled back hard was here. So I'm expecting another nice pullback here. All right. Let's go ahead and measure. I didn't think about this, but I'm just doing it now. Just want to see what that looks like. I just want to see if we're going to get half of that. So that's 4.69. Let's see if we get 2.3 of that. Okay, we got 2.7. So that makes me happy. So all that tells me is that this is a good, normal pullback or retracement reaction. It's pulling back to the 50% mark, or 50% of what it last pulled back. So this last pullback was 100%. It was 500 pips. You know, that was the full range of the pullback. Now it's about half of that, which lets me know it's lower highs. Higher lows is what I meant to say. And that higher low, of course, brings us to the position of believing that that's going to continue the uptrend. So that's beautiful, 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 beautiful information. Let's see what we got here. So once we get here and these buy stop orders or buy orders trigger, then I'm going to be shaving here at 109.33. Of course, I can't put the orders in because I just showed you guys I'm in a short down to the buy limit order. So I can't place those orders as of right now. But I just wanted to make sure I annotated the chart so that you guys can see what I'm going to be doing after those buy limits order trigger. I'm going to be shaving a quarter of my position off of these TPs, 109.33, 111, 111, and 112.50. Both of those simply because it's under the resistance level. I wanted to be able to capitalize off of these. Now, this 111 is right above the pivot high on the 4-hour. Okay, so that's why I'm TPing there. Let's go there real quick. You see how resistance is at 110.86 here? I am anticipating an uptrend, but when price action leaves this buy limit order, comes up, and I shave here, when we get up here and they break out from here, typically when it breaks out from a range, it pulls back to that range. And so this range that's resistance now, this same price will become support. I don't want to be in this trade and it pulls all the way back to this area. So what do I want to do? I want to shave and make some more money as it breaks out, so that when it comes back to this area, I can add another buy position to go long, because I've already made money. I can take the money that I used and shaved, I can take that money and put it back on here, go long again, make more money. Hope you got that. All right. Now let's get back to the 5-day. Boom. Here we go. So what we have here is a continuation to the upside. And when we get here, I wanted to clear this pivot. And so I have 117.85 as our take profit 4. And for TP5, I wanted to clear the supply zone. So we got 121.15. One more time. Once this buy order, either one of these trigger, I'm going to shave a quarter of my positions off every time I get to these TPs. All right. This one is because 109.33 is before mid pivot on the 4-hour chart. 111 is right after the breakout from the 4-hour. This one is just below major resistance. This one is below this 5-day pivot area. And then the last take profit that we're going to shoot for is just below supply zone. Those are the reasons why I'm targeting those areas. I hope you guys enjoyed this video here, and you have some clarity about why we're going down, but why there's also a big picture uptrend. I hope that makes a lot of sense. I made some modifications to our TPs from the previous videos. So please, please, please make sure you make the necessary adjustments. And as always, if you guys enjoyed today's video, go ahead and give it a boost. Let somebody else who's looking to get into Eurodollar see this analysis and make some money if it works out. Okay. Also, if you guys want to reach out to me or anybody on the team, you can reach out to us at Telegram on Daily Bread Q&A, or you can go to our website at toshimarkets.com. We also have more content at Fx'tive HNW on YouTube, and we also post everything on Twitter as well. So if you guys are on Twitter or YouTube, you guys can catch us there. We trade everything, doesn't matter, other than options. We trade everything. So if you guys want us to look at something, chart, let's say a commodity, an indice, an equity, like a stock, something like that, Forex, cryptocurrency, metals, CFDs, indices, and not all that stuff doesn't matter. Just send it over here to us, let us know, and me or one of the team members will go ahead and get it charted. Here's some of the team members here. I don't have them all on here. It's about 11 of us. But go ahead and follow them whenever you get a chance. Reach out to them if you need to. They're on my team, and we'll go ahead and help you out as best as we can. As you can see, we've got quite a bit of stuff here. Most of the time I focus on Eurodollar because it's the most volatile and most liquid pair on the market, most traded instrument in the world. So why would I not trade it? If it's the most traded in the world, that means it's going to have the most movement. And that's what I'm looking for, movement, so I can get paid. I can't get paid if it don't move. So trading anything less than Eurodollar, it's going to be, it could be slower. Unless you're trading, let's say, a minor currency, like a pound dollar or something. Those are pretty fast moving, even more so, because of what they're paired against. But all in all, just wanted you guys to see that. And also, if you want to be alerted for anything that I'm doing here, whenever I jump on or post something, go ahead and follow, and then that'll happen. Also, I want to hear from you guys. If you, let's say I just posted this AMC stock trade here. If you guys like what you see here, go ahead and give it a boost. That way other people can see it and share it. And if you guys have comments about it, go ahead and comment. Okay, see how a couple of comments here. I always answer questions and comments about anything. So go ahead and do that, and I'll take care of you. Other than that, God bless you guys. Wish you all the best, and I hope you're profiting with the professor. Take care.